do not try and bend the spoon. That's impossible. Instead, only try to realize the truth.
What truth?
There is no spoon.
There is no spoon?
Then you'll see that it is not the spoon that bends, it is only yourself.
The Oracle will see you now.
What is going on YouTube? It's Brendan from Market Makers. Want to do a full screen intro today so I can thank you all personally for helping us cross and crush 30,000 subs. Really do appreciate all your support. Lee and I were expecting to get maybe 50, 100 subs over 30,000. Hundreds of you subscribed. That last video almost has 16,000 views. So thank you guys so much. Do like and subscribe if you have not done so already to the channel. I effort to bring you something unique in this space. I look at market history as a heterodox economist, market cycles, and I marry that to advanced Fibonacci techniques and esoteric concepts. And you only get it on this channel. As traders, we go on hot streaks. If you guys have been watching this channel the last couple months, we've been on a massive hot streak. In our Discord, we shorted the rally at 45.92 on the S&P. That 11% decline in the S&P, 500 plus bars. Guys, just recently I shared with you the 43.82 short on the S&P. That was a nice 300-point drop. If you watched October 23rd, I gave you the Bitcoin long from the diamond breakout, which is a nice 11% pop within a day or two. And now looking at my phone this morning, Bitcoin was up another 5 or 6%. So you're pushing 20% on that trade, and you got it all on this channel. When I started this channel back in summer of 2021 for the new subs, I joined a Telegram in the spring. I didn't know anything about crypto. I wanted to trade crypto. I knew a little bit about Bitcoin, didn't know anything about crypto. My brother was trading some Dogecoin and some other things. He's like, oh, you got to get into crypto, man. You love to trade. I was trading equities. I was trading commodities. I was trading Forex. So I joined the Telegram. I started posting my TA, posting trades. Lee messaged me. He's like, man, lots of people are taking your trades. You need to do a Discord. I didn't want to do it. I didn't know how to do it. He's like, I'm going to make you one. He just messaged me one day and said he made me a Discord. And then, 12 people joined. 12 people joined from the Telegram over to the Discord. Now we have 12,000 people on the Discord and over 30,000 on the YouTube. So I really do appreciate all your guys' support. Guys, I want to talk about real quick before we jump into the charts. We need to talk about, I'm going to go a little bit of a rant on the macro because you need to understand what's happening right now. The video title is Boom Bust, or the thumbnail is Boom Bust. I'm going to show you the boom patterns that can give us higher prices, but you need to understand overall this is a bust cycle. It is a bust cycle for the recession. We've been over the LEI index, the leading economic indicators, printed 20 months consecutive negative, the longest run since the GFC, which was a global financial collapse. 100% predictor of every single recession. We've been over the yield curve inversion, 100% success rate going all the way back to World War II of predicting every single recession. And right now we have the longest and strongest in duration yield curve ever in market history. I want to throw a third hat into the ring, the SOM rule. Lee, throw up the SOM chart. This is from Bloomberg. Claudia Sahm was an economist for the Fed back in 2019. She invented an indicator, which was a 3-month moving average to track unemployment. When unemployment goes from its cycle low within a 12-month period to up 0.5%, 1%, you every single time have triggered a recession. Okay, that's the important thing to take away here. 100% of the time, without fail, you trigger a recession. Now, this goes back for every single recession to World War II. You can see here on the chart, Bloomberg went back to the 1960s. Now, if you look at that teal line at the bottom, the dotted teal line, that shows we're about to trigger the SOM rule. Now, when you look at the facts from the Fed, we had 3.4% unemployment. 3.4% was our low. And now we have 3.9. So that is a 0.5% increase. So I don't know why this line hasn't crossed yet. If it is, it's going to on a downward revision potentially, or this chart was made before we got the downward revisions, because as of right now, just statistically speaking, you've triggered that 0.5% move, which means you've triggered the SOM rule, which means 100% accurate for predicting a recession. Not one single time in history, going back through the charts with the indicator, did it trigger early or did it trigger late? And you guys heard what Paul Tudor Jones was saying. He thinks recession starts right around the corner in Q1. So the key thing is the markets, are they going to move up from here? Where are they going to top out at? We're going to look at that in the charts. Guys, I've had Michael Darda clips on my show before. Fantastic economist, lives down in Naples where I lived last year. I want to play this clip because he was talking about unemployment as well. Listen to the pushback that the commentators give him, and then listen to his response of where unemployment is going based on market history. We'll talk about it on the other side.
Not only that, you have the unemployment rate that's moved up to 3.9% from a cycle low of 3.4% seen in April and in January. Over a 9-month interval, we've never had a 0.5% move up in the unemployment rate that was not associated with a business cycle peak or an economy already in recession. So essentially, the proxy for nominal flat lines in the unemployment rate at least is giving us, I'd say, a soft recession signal. And I think that can tell us a lot about why the bond market is rallying here.
Michael, that's the first chart I looked at this morning, folks. This idea of how low did the unemployment rate go, and as Mr. Darda mentions, up we go to near 4%. I would suggest that we've got a new regime, sort of as we look at a new regime of our starter where the Fed's going to land on monetary policy. Do we have a new regime in pure U3 unemployment rate? Is, for example, 4.3% the new 5% unemployment?
Well, it would be unprecedented in the sense that anytime you go up half a percentage point, you continue to rise, with a cumulative rise during a recession of at least 220 basis points. Usually it's a little bit more than 300 basis points in total. So if we end up with a situation where the unemployment rate just goes a little bit above 4 and stops, that's possible, but it's literally unprecedented. So typically when you start to see the unemployment rate hook upwards, it continues for a while. It signals a recession that isn't recognized right away. And if the neutral interest rate, R star, starts to fall here because the economy is rapidly losing steam and the Fed is reluctant to follow suit, that's how you end up in a recession hard landing. And I think that would end up reinforcing the message that the yield curve has been sending now for well over a year, a long leading indicator along with monetary growth, along with the tightening in lending standards. We got another iteration of that yesterday out of the Fed Senior Loan Officer Survey. So all of the leading indicators have been suggesting that we're getting long in the tooth here in terms of the business cycle, and that recession risk is still elevated, even though the consensus view on Wall Street now is that the soft landing's in the bag. It always looks like a soft landing just before a recession. Trend growth is an oasis to below trend growth, and below trend growth means the unemployment rate is going up and you have a recession.
So what did Michael Darda say? Michael Darda said historical norm would be unemployment should move up 200 to 300 basis points. So you would be looking at unemployment right now almost at 4%, 3.9. You would be looking at a 6 to 7% unemployment rate. Now remember, the Fed targeted just a 1% move on unemployment, and we're halfway there. But historically, in the marketplace, you will have a 200 to 300 basis point move. And when the host said, well, couldn't this be different? That's the big thing, right? Isn't this time different? Earnings, whatever the reason is, couldn't this time be different? It would be unprecedented, he said, meaning it has never happened before where unemployment would just go up 1%. And one more video clip to show you on this notion about unemployment just stopping at 1% magically. When Fed Chair Powell was in front of the Senate, he was confronted with this by Little Hiawatha. And even she knows the data about unemployment moving 1%. And if you get a recession, last video clip, Lee, run it.
Since the end of World War II, there have been 12 times in which the unemployment rate has increased by 1 percentage point within 1 year, exactly what you're aiming to do right now. How many of those times did the U.S. economy avoid falling into a recession?
you know, it's not as black and white as very,
Just
very
looking at the
infrequent.
numbers, it actually is pretty black
Alan
and white.
Blinder's written a book on this, and
There have been 12 times that we've seen a 1-point increase in the unemployment rate in a year. That's exactly what your Fed report has put out as the projection and the plan based on how you're going to keep raising these interest rates. How many times did the economy fail to fall into a recession after doing that? Out of 12 times.
I think the number is 0.
I think the number is 0. That's exactly right.
So you see her berating Powell every single time, 11 times. Unemployment goes up 1%, 11 times you get a recession. Understand that, guys. A SOM rule, which makes sense, obviously. If it moves up 0.5% and you get a recession off the cycle low, if you go up 1%, you're definitely going to get a recession. And that's the key takeaway, 97% probability you're getting this recession. Knowing this information I just shared with you here over the last 5 minutes makes you smarter than 99% of the talking heads you're going to see on TV, on Bloomberg, on CNBC, on the business news channels, and on YouTube, because they don't know this data. If they do you ever hear them say it? And one more thing to take away from this, congratulations to retail, because you have been beating the professional money managers since the pandemic in performance. And here it is on a chart for you. Look at that. Retail crushing the professional money managers. And people say, why? How can this be? They're so smart. They're on TV. Guys, there is a sage of wisdom, George Carlin, back in the 90s. I love George Carlin. This is a fantastic clip. If you want to understand why people don't understand basic economic facts and the professional money managers, why these traders that are on CNBC that have their own podcast now, why they get everything wrong, here it is from George Carlin, and then we'll go right to the charts.
Some people are really stupid. Did you ever notice that? How many really stupid people you run into during the day? God damn, there's a lot of stupid bastards walking around. Carry a little pad and pencil with you. You wind up with 30 or 40 names by the end of the day. Look at it this way. Think of how stupid the average person is, and then realize half of them are stupider than that. And it doesn't take you very long to spot one of them, does it? Take you about 8 seconds. You'll be listening to some guy. You say, this guy is stupid. Then there are some people, they're not stupid, they're full of shit. That doesn't take very long to spot either, does it? Take you about the same amount of time. You'll be listening to some guy and say, well, he's fairly intelligent. He's full of shit.
That's right. Everybody is stupid. That's just the truth of it, guys. You know more facts now watching this channel than 80%. Let's use 80% Pareto distribution of all the other commentators, okay? All right, Lee, let's go ahead and start the show and get into the charts.
Pass it down.
All right, guys, let's go ahead and go right into the 10-year. So we had the auction. Auction was pretty flat, and we've talked about this before, but understand, if this was the peak in the 10-year right here at 5%, if this was the peak, yields have been declining. Why are yields declining? It's a multi-factored market. Yields are declining because the economy is getting weaker. Money is fleeing to the bond market, as well as we have, $1.5 trillion in a money market right now. So money is fleeing, and this could be the peak. And if it is the peak, back in .com, 7 weeks after the 10-year peaked, the equity market followed the yields down. And 13 weeks in the GFC after the 10-year peak, the equity market followed the yields down. Here you go. This is a GFC. July 2nd, 2007, 5.19. Look at this thing decline the whole way down. The equity market followed it 13 weeks later, bottoming December 15th, 2008 on yields, and obviously bottoming March 2009, the spring equinox, 666 on the S&P. This is important information to watch because the market is on a clock. Let's go ahead and look at the baby S&P, the DJI. Key level here, we're going to look at the boom and bust of these levels. Key level 34,159. And again, why is this a key level? Because this is your W, guys. If you want this to break out to the upside for an extended rally, and go to the 1618 target, maybe test the top of this trend line. That's 35.3. You have to take out that fractal there at the B point. 34,159 is exactly where you're failing, where you could easily roll over if you don't get this extended push from people in the marketplace, right? Key levels to watch, 34,661 if you do break out, and then 35.3. Notice this does not take out your rally high on the Dow, but this is kind of what I think would happen with the markets. I don't think you're taking out your rally high. We'll look at that fractal pattern on the S&P, but that's the bullish case. The bearish case is pretty obvious. Other than all the data I just gave you, the bearish case is you have a death cross just about to form right here. We know the markets, based on what I showed you before, the markets can rally up into a death cross just before it, rally up after the death cross. But in a bear market, they absolutely crater. I'll show you that here on the Dow once again, guys. And this is your rally up through the death cross. See, this is how many times I've showed it to you. This is your rally up. So you had your all-time high. You have your death cross here. The market rallied before the death cross, just like it is now, sold off. You get your death cross, rally back up into the death cross, and then you have the final capitulation after the death cross. Again, being in a bear market, understanding the cycle matters for understanding the damage. And this is the Dow. The Dow did not fall as much as the other indices. 20% move after that rally after the death cross, 20% move down. And that's a bear market death cross. So these are the key levels to watch for the Dow, guys. You got to see if you can flip 34,159. Your key support level is going to be your 15,200, basically laying right on the fib of 33,763. Let's go ahead and look at the S&P from a monthly time frame, your boom pattern. If you were to boom, you get this W, right? You can see it here on the Fibonacci pattern, the X5 pattern. This would take you to 49.18. This would take out your all-time high. Is there precedence for this? Bitcoin did it, took out its all-time high. The CAC did it. The DAX did it. But they all did it on this rally. When the S&P was rallying up to 4,600 and then failed, they kept rallying. They did it actually a little bit before, but they kept rallying and made a new all-time high. I don't think we're going to take the new all-time high, but you do have the ability for potentially more upside. We're going to look at this on a daily time frame, but this would be the ideal bullish situation, taking out your all-time high. But guys, once again, doesn't change what happens with the bust when the recession sets in. Let's look at this. Why don't I think that we can rally up to a new all-time high? I have this fractal pattern, guys. This fractal pattern is showing you a law of three pattern, right? Key esoteric concept. The market moves in threes. You see it with head and shoulders. You see it with ABC correction, three candlestick reversals, three white crows, three black soldiers. There is any number of law of three patterns in the marketplace. And this is really nothing more than an ABC. But the market symmetry, the market geometry is what's so fascinating about this. From the all-time high to your market low of 3,500, 201 bars. And then from your market low to your rally high of 4,600, 203 bars, nearly an identical symmetrical move. So the projection for that to complete the symmetry takes you out to May 6, 2024 for the bottom. And if this is just a normal run-of-the-mill recession, S&P will be trading at 12 to 14 PE. It'll come down to that 3,200 target, and that could be your bottom. If this is a bubble, like Grantham thinks, like Scott Minerd thought before he passed away, like Ray Dalio thinks, like I think, like other commentators think, then you're looking at a minimum decline of 50% with my personal target, 2,000 to 2,400, okay? But I'm looking at that date, May 2024. I don't think we take out the 4,600. I do think it's quite possible, showed you guys this before back on the monthly. Let me show you this again. Get rid of some of this noise, get rid of the pattern. I do think it's quite possible you just simply make a double top, because that's exactly what you did over here. I'll show you this with the pattern so you can see it a little bit better. ABCD pattern. We'll just take this impulse here. You did this move up on your all-time high, your sell-off, and then your move back up for the top, right? So if I draw it, it just looks like this, because you might not be able to see that. is your sell off, your move up, and you fell down. I think this is exactly what you could do here. Your move up, your sell off, this is your move up. This move up could come up to 4,500, the 786. It could stop right here at the 4,400 call wall and start breaking down. But that's what I think for me is the most likely scenario. This is why I'm short below the 4,400 mark, guys. And we've talked about this with the lunar cycles. If you guys, a lot of people are commenting because they saw that I had the lunar cycles, and I'm going to show you the solar cycles when we have time on the next video. But watch this video. Lee, show them the thumbnail. We went over these esoteric lunar cycles in this video, got a lot of views. Check it out. You'll see it. But this is for confluence, right? Natural law of trading, Charles Dow, W. Dugan, Richard Wyckoff, Gartley, R.N. Elliott. Natural law of trading, you need to understand cycles. And if you understand cycles and you can find confluence, full moon, new moon, double top, right? Full moon. Perfect short here. And again, you have trades here on these movements with the moon cycles. And we had the eclipse gave you the exact bottom candle for this rally up. So watching this key pivot, all this is explained in that esoteric video, guys. Watching this key pivot right here, November 13th for the next new moon, because the next new moon could give us yet again another top. And it looks like it could, because that's November 13th. That's a Monday. Remember, we talked about in that esoteric video, the Puetz crash cycle, which goes all the way out to the following full moon, November 27th. Steve Puetz, he's a mathematician. He does fractal analysis, geological structures, but he wrote a book, and in that book, it had a chapter on the markets, and it key crash cycle he noticed in the 8 crashes that he examined was with the lunar cycles and the confluence with the lunar cycles, especially after you have an eclipse, a solar eclipse, ring of fire eclipse that we had October 14th. And then we had the lunar eclipse following it, going all the way out to the next full moon. Again, it's just a statistical thing. He said be a 1 in 127,000 chance. It was just random that these 8 crashes all followed the same cycle. By that next full moon, you should see a 2 to 4 week strong sell-off. That's if it plays out. That's just a crash cycle that a mathematician discovered that I read about. I thought it was interesting, so I'm sharing it, but I'm looking at this for potential tops, okay? Giving us a potential top, maybe the first top for this up move, and then a down move, and then maybe doing this for the full moon over here. Exact same pattern that we did here, but in reverse. New moon, full moon, okay? Seeing if that plays out that way, that would be really, really interesting if it does. Looking at this on the S&P on a tradable chart, MFI coming up on the daily. As you can see, the 618 from your rally high is 44.16. Again, this is the apex of the 2 channels and the 618. You're trying to take out this fractal at 44.01. You're at 43.91 right now. So you're trying to rally up. You keep fading out. You know, if you don't get that push, guys, you're going to roll over, right? Whether you roll over to test support and then come back up. What does that look like? It's a 3-wave pattern, the exact same 3-wave pattern we shorted for that 300 bar drop, okay? The rinse and repeat trade. You haven't had the rollover yet. You're just drifting higher, trying to take out that 4,400. We'll see how this plays out. I'm short here, guys. I'm short below. You know, if it gets above 4,400 with some daily closes, my bat antenna is definitely going to be up. But really, I like this trade below 44.16 because if you flip 44.16, then look, I think you're going to 4,500 at the 786, where I'll be looking for this structure that you made in that 4,500 range, okay? But I'm short here, looking for this rollover. We'll see if it happens. And if it stays below 4,400, I think it could be a fantastic trade, running a nice hot streak. Some of these trades, which I shared here on YouTube, obviously, like the 43.36 short as well, running a nice hot streak. So we'll see if that continues. And if this does make a double top and roll over, guys, you're going back down to 4,100. It's going to be another 300 bar trade where you're going to test this bottom. So we have some upward momentum. We have yields going down, DXY slightly weaker. So you're seeing the markets rally, and the boom pattern here, guys, is the same. You have your W. Let's get our targets, right? Let's get our targets off this W right here. And you can see it here on, I showed you on the log scale, but we can go ahead and just pull this. You can see it here on the daily. I think it's like a $10 difference. 45.84 on this. Oh, this is a smaller W, not from the all-time high. This is the rally high W. So this is your boom pattern to get you up here on the rally high. So this would be 45.84, which would still be below your peak here. And that's the boom pattern if you can get that. Again, that's not my base case, guys. I think you're going to double top out either here at 4,400, possibly 4,500. We'll see how that plays out. Let's go ahead and move forward. Bitcoin, guys, I gave you this diamond trade October 23rd. You know, we've had shorts in here. This, again, this has just been an awesome trading range for Bitcoin. This wave projection, this Fibonacci waves, my esoteric wave theory worked out beautiful. 1618, 31245. Gave us a trade setup here for short, gave us 2 trade setups here for shorts. We've been trading this up and down. We had the breakout flipping 31245. I told you guys about breaking this fractal October 23rd within what? 8 hours after giving you this trade setup, the stop loss, how I would trade it. This thing moved up 11%. And now if you took this all the way to the top, you made almost 20% at the peak here. This got all the way to 38,050. And what was my target, guys? My target is the 2618 at 41K. Could it still get there? Maybe that was the top. Either way, 20% move off a trade. Fantastic trading opportunity. I don't like trading anything here in between, guys. I know people are going to ask me. People are asking me on the Discord. People probably ask me in the comments. We have harmonic expansion here between the 1618 at 31,245 and the 2618 up here at 41K. Also here at the 35,697, this is our 618 from that 48.2 pull down, right? From my retirement trade. This is that 618. So you're going to try to use this probably as support, and you may need to do something else here, some type of higher low W again to try to come back up, or you're going to start potentially topping out at this level. I don't like anything in between. If you took the trade when we got the trade, when I shared the trade, this is a great move, but I don't want to do anything in here because it's no man's land. It's above the 1618, it's below the 2618, it's above the 618, but below the 786. I like to trade at extremes, if you will. So I like to trade breaking a fib or using a fib as resistance, okay? But no man's land, I'll stay away from it at this point and see what it does from here. And I'll share that with you as well on the videos, of course. Let's go ahead and look at this on MFI. You're not overbought, so we'll see if we get any type of rebound today. Maybe come back up more towards your high. Nice impulsive move. Now, one thing to note, guys, Robinhood reported earnings, I think yesterday or the day before. They said their crypto trading volume is down 55%. Coinbase, the largest American exchange, said their crypto trading volume is down 30% or 33% from last year. So those are big drawdowns, and you got big moves in the market. Remember, Bitcoin is a controlled market. You have single stocks in the S&P that have more market cap, like Apple, than the whole crypto market, okay? So just understand that this is a controlled market and you can get these controlled pumps, but the amount of traders, the volume of traders, they're down significantly by a third or half, at least on the American side. So that's not as much money in the market. So these rallies will be rallies to fade. And I would love to see this get up to 41K because, again, my core thesis is this will pull down with the markets. I don't believe it's decoupled. That's why when the S&P was at 3,500, Bitcoin hit 15.5, right? I'd predicted 10.5 all the way back in 2021, but it hit 15.5. Pretty close, a lot closer than 250K. Looking at the Nasdaq. Nasdaq broke out of our channel, again, getting some upward movement here. And fib targets here, guys. This is the boom pattern once again, right? Let's look at the boom pattern. You have your clear W here. So we can draw this. If we were to take this, and you have to clear 15.7, and then your 1618 harmonic expansion would be 16,144, taking out your rally high, okay? That would be harmonic expansion. If you were to clear this, you're trying to break above the fractal right now, 15,350, you're at 15,375. Let's see what this does, right? This is all the big Magnificent Seven stocks. You know, understand the weightings in the market here. So right now, 10 stocks for the S&P equal 34% of the S&P. This cycles repeats in all the bubbles, by the way. The small caps will fall down first. The small caps lead the large caps up, and they lead the large caps down. It's a divergent cycle that appears in all the bubbles. And where's the Russell right now? I don't have a chart on my screen. The Russell's back at its bottom, the market bottom after making its all-time high. So the Russell cratered. Last time the Russell was down there, the S&P was at 3,500, okay? So the Russell cratered. It's not showing a lot of signs of life, but the big mega cap caps, the last vestige of safety. You hear them say this on TV. Well, I like the cash sheet, or I like the balance that they have over at Apple. They're basically a bank. You hear this over and over again. So you have money going into these assets, but when they weaken, they will trade down to the majority of the market. I do not believe, especially with the recession coming, the majority of the market will lift up to trade with the top 10 stocks. It's more likely the top 10 stocks are going to roll over. Doesn't mean they can't rise. So you want to watch this 15,699 key area. If you start breaking back down, do you want to look and see if you get a three-wave pattern that you have every single time here? Breaking out of this channel, your next key fractal level up here is going to be 15.5. You're at 15,383. We'll see what this does. If you just get some wicks up here and it starts rolling over, or if you get some confluence with the S&P as well moving up. Looking at gold. Talked about gold here on the Discord as well. Looking at this on an 8-hour pattern, guys, this was nothing more than a 5-wave topping pattern on an 8-hour time frame. It got up to almost 2012. What did I get to? 2008 or something? 2009. So it almost got up to 2012. I had an alert set at 2012. Didn't quite get there. I missed this short, but gold fell. And if you look at this from a Wyckoff perspective as well, I wanted to do this on two. So you have your 5-wave topping pattern inside your Wyckoff. Your Wyckoff is your orange lines. Okay. So here's your buying climax. Here's your reaction. Your B wave was a down thrust. I was explaining this on our Discord. Your B wave was your down thrust. Your C wave is your up thrust. Your attempted pivot out. Got a second up thrust. Sign of weakness. Got a higher low and one final up thrust for your E wave. And then you had a sell off from 2004 down to 1944. Now, what's important if you're interested in trading gold is watching this structure right here, 8-hour time frame. Let me zoom in some so you can see it's a little bit better. Watch this structure because your baseline here at 1964, what's gold doing? It's trying to back test it literally to the dollar. It's back testing your 1964 bottom of your Wyckoff structure. And if you end up making this pivot, right? So you fell out, this would be your Livermore pivot to the downside. Get candles testing here, candles failing, maybe you come up, maybe make a baby double top. If you end up making this pivot, this is a tradable move down from 1944. If gold was to break down with any velocity, that's your fractal break to the downside, which you don't have a fractal formed yet, but that would be your fractal break to the downside. Now, I say that gold, just like oil, is risky right now with the conflicts. I say this every video, guys. I'm just trying to beat it in because if something happens, you can see gold as a fear trade shoot back up. So be aware of that. But this is a clear topping pattern, back testing, a key resistance area, which lines up really close to the 1969 here on the fib as well, which did act as resistance. So watch this area. Just be careful if you do trade commodities. Let's knock out the European indices. I'll wrap this video up afterwards. Let's go ahead and look at the UK, the FTSE. FTSE again, guys, trying to make your W. It's going to follow the American markets, and you have that W trying to form right now, right? I show you this every video. All you need to know is M and W patterns and what cycle you're in the market. You got to take out this fractal high, roughly, what is that, 74.86. You got to take out that fractal high to get this break, and you really got to watch that 50 at 75.20, and then the 618 at 75.39. So to really get any, this is a lot of resistance, right? You have your death cross, you're going sideways, you're in a Wyckoff trading range of 72.22 to 76.89. But to get any type of momentum, you need this thing to come up above the 50, break the 618, probably has to pull back, give you a higher low structure to come back up and do something like that. Will all of this happen? I mean, it looks really doubtful to me. Maybe you can come back up to the 618 at 75.39, but first just watch the 74.80. That's what you need to watch. And if you start building a bearish structure, if this turns into a double top, 3-wave pattern, then this could be where you're going back down to your fractal lows here in the 7,200, 7,250, 7,220 in confluence with the U.S. markets. Watch the FTSE, guys. Lots of resistance above you. I don't anticipate anything too big happening here. What about the French 40? It had its multiple all-time highs. Again, you have your W pattern here forming as well. Got this nice larger W right here, right? So you have your W pattern forming, but you need to watch 71.58. You're getting above the 50. You're still below the 200. Once again, death cross. Again, you can rally into the death crosses, guys. Bear markets, you can still rally into the death crosses. So flipping 71.58 is key. Holding it as support and moving up will be absolutely crucial to more upside, but that's the first level you need to watch. See how it behaves at 71.58. If it starts failing, right, here's your pivot. If it starts failing, makes a double top, starts rolling over, then you're going to want to watch 68.30 where you hit before, okay? Going forward to DAX. Same thing, DAX testing resistance right here at 15,359, pumped above the 50, the 200 is above it. You're trying to pivot out, and here's your disjointed W, but it is still a W. Here's your pullback on the daily time frame. You can always go to smaller time frames and see this more clearly too. Here's your pullback, and you want to see if you can move up in this W. Let's just get a projection. If you were to move up, where would that 1618 be? This is a very small pullback, but your 1618 is 15,387. So it's literally right above you. So I would watch and see if this starts petering out right around the range. You're at 15,357. See how you act around 15,387. And again, death cross in effect. You could rally into the death cross if you get harmonic expansion. 2618 is 15,583. Puts you right up here, still underneath your 200. So we'll see how long, how durable this move is. Money flow is moving into the asset. Momentum, however, is rolling over. So this could be a reaction rally to the US markets as well. We'll look at Tesla and we'll just do Nvidia and then call it a day, my friends. And I hope everybody has a fantastic weekend. Tesla, again, this is, we talk about this all the time. You got your big gap. I like Tesla as a short at 249. See if you can come up and fill that gap. You have a W here. If you can hold this pullback, you have a W. You can try to come up to the upside. And I don't know where this pullback will end, so I can't really take a target for you, but let's just say it ended where it is. You could get back up to the 230s, 240s. So it's possible, but you want to see Tesla hold here. Let's just do a small fib here and see where this could end. You're falling to the 486 at 210 right now. The 618's at 206. You really want to hold the 618 at 206. 618's key retracement level. If you can hold the 618 and try to bounce back up, I want to see that gap fill 242. Love the resistance at 249 with the trend line. And where is to it? It's a nice move. So Nvidia had a nice move. Here's your W, guys. And look, you're breaking your fractal high. Here's your fractal we've been covering at 476. So what would our targets be again for Nvidia? 1618 is 527, and you got to clear 498. 498 takes you to the top of Wyckoff, where you could just up thrust or make some type of bearish pattern and come back down. But if this moves, guys, watch 1618 at 527. That will be a key target, giving us completion here of our X5 pattern or Fibonacci pattern and harmonic expansion between our B and D points right here. Right about there. So 527, that's where I'd like to see Nvidia get to and top out potentially. Money flow, you're still in the bullish territory, rolling over a little bit, but price is moving. Something's happening. I have to watch the news after to see what's going on with Nvidia. And our earnings, once again, are when? They are November 21st. So still coming up. And I think I have time for one more. We'll do Adobe. Adobe, because I've been tracking it so closely, got our breakout, guys. We've got hung up at 592. Again, my target 608, 616. Got the breakout. Have your W off your breakout here. You have your higher lows in the W, which is what you want to see. Broke your fractal at 574. Got up to 592. I'd love to see this cross 600, get the 608, 616. Watch this in Confluence. Big AI play with the marketplace. All right, guys. I hope everybody has a fantastic weekend. Lee, take me out with an outro. Talk to you guys Monday.
Как